Past the hour. Welcome to BizAfrica. A new index report on country progress towards reaching development goals shows 30 countries in sub-Saharan Africa have made accelerated progress in the last 3 years. An analysis published on Wednesday by the One Campaign reveals 16 countries are on track to halve extreme poverty by the year 2015. But the organization warns, too, that in spite of significant progress, donors need to step up assistance to those in extreme poverty who are still reliant on international aid.
In the first report of its kind, the One Campaign has indexed country progress on reaching United Nations Millennium Development Goals for 2015. Its findings reveal that sub-Saharan African nations like Rwanda, Uganda, Malawi, Ghana and Ethiopia have increased government spending in key areas such as health, education and agriculture from $84 billion in the year 2000 to $363 billion in 2011. Ethiopia's performance has gained particular notice.
Ethiopia has managed to reduce the number of people living in poverty by 10 million people in just over a decade. And at the same time, we see that they've spent nearly 45% of their government budget on these poverty-reducing sectors like agriculture and health and education. And at the same time, they've had an 8% growth rate of their economy.
But the report also identifies the majority of sub-Saharan African states are behind on their financing commitments, and many large countries in the region, such as Nigeria and the Democratic Republic of Congo, are farther off track.
If Nigeria were to have met its commitment to health spending between now and the 2015 goal, it would have an additional $22.5 billion at its disposal for the health sector.
As Africa's largest aid donor, campaigners warn that the European Union's decision to cut overseas aid in its next budget could make or break the Millennium Development Goals for African countries.
We've seen that European donors have decreased aid recently. With the progress that we've seen in this report towards the MDGs, some of these countries in sub-Saharan Africa, with only 2.5 years to go towards the deadline, this is really not the time to be cutting aid.
The One Campaign's new index paints a reassuring picture of sub-Saharan African governments increasing spending on key development areas. It even suggests that these 16 top performers might have their extreme poverty levels by 2015. But that good news does come with a warning. That momentum must continue, even accelerate with the help of donors if Millennium Development Goals are to be met, and ensure that that blueprint of eradicating threats to those most vulnerable becomes an attainable reality for Africa. Sandra Gottman for CCTV in Brussels.
So let's widen that conversation further. Sandra Gottman joins us live from Brussels. Sumitra Naidu is coming to us live from Johannesburg. Thank you, both of you, for joining us. And Sandra, let me begin with you. 16 countries well on course to halve extreme poverty by the year 2015. But then again, how probable is that, given that we have just 1,000 days left to 2015?
Well, when it comes to the top performers, the report suggests that those targets are not impossible. Some amazing data from countries like Burkina Faso, which has been described as a trailblazer, spending over half of its national budget on sectors that actively reduce poverty levels. Those figures have emerged from the years 2000 to 2010. But the key thing here is that those 16 countries which are reportedly on track cannot take their foot off the gas now, because, as I said, these reforms have seen an acceleration, and spending on development has increased, and not only does that have to continue, but be stepped up. And this is the last lap, so to speak, before the finish line, before those Millennium Development Goal targets creep up in 2.5 years' time. Now, several factors have a role in that. Political stamina has to continue. The African economy should continue to see growth as well, and of course, the support of international aid should remain.
Well, Sumitra, let me come to you there in Johannesburg. Sandra says the support of donors has to be there in order for momentum to be accelerated. And let me just draw your attention to what happened earlier this month. Britain announced that it will cut aid money to South Africa, saying that South Africa is an economic powerhouse. So is Africa ready to stand on its own 2 feet?
Well, yes, this is still being hotly debated at the moment. The government believes that, this money is still needed. But yes, many are of the view that South Africa has grown economically. It has a very strong policy in place. It has come a long way. And this is essentially where some of this aid was going to. It was improving mortality rates, and it was going to the small business sector. It was going to entrepreneurship programs, and this was all key to addressing some of those Millennium Development Goals in terms of reducing unemployment, job creation, and also reducing poverty. And if you look back at where that funding was going, and if you look at some of the research done into those programs, it seemed to have been working. So this is why the South African government believes that this UK aid would have still helped us in terms of addressing that. And even though that South Africa has grown substantially over the years, it is in a much better place than it was many years ago. There's still a lot more that needs to be done, so we still have a long way to go. And of course, yes, aid coming from anywhere basically helps the country to reach all of its goals.
But Sandra, the European Union seems to have picked up on Britain's cue. Now, the EU says it will cut overseas aid in the next 7-year budget, and this is something that has been received with a lot of criticism. How is the EU responding to that criticism?
Well, that is true. Since the crisis in Europe, we've seen around a 4.3% drop in overseas aid, most of that going to Africa from the European Union. But what we're hearing lately from Brussels is more of a push to get governments overseas to take the reins themselves. And there's an increasing focus from the European Union to make sure that aid to Africa comes in a more sustainable form. They're looking to make smarter investments in the region. They're pushing political initiatives like increasing transparency, holding the extractive industry to account, for example, so that citizens in Africa can hold big businesses and their own governments to account so that resources can be better monitored. Of course, aid from the European Union will continue, but critics are fearing that those cutbacks to the European budget might be particularly bruising, especially in countries that perhaps didn't perform well on the One Campaign's latest index and haven't done enough domestically to help themselves for the future.
Sumitra, Sandra did point out in her report that there are several African countries that are still lagging behind in achieving the MDGs. So what really needs to be done in order to sustain this momentum?
Well, it's a combination of factors. If you look at some of the countries that are making progress, you're looking at leadership, you're looking at commitment, you're looking at spending. Some of the countries that are making progress, Rwanda, for example, which tops that list, so many great stories coming out of Rwanda. And that's really because the country's government is showing really good leadership. There's good, strong public-private partnerships there. They are addressing so many areas that are, of course, addressing the Millennium Development Goals. You have Ethiopia that was, named in the package previously, that, it spent so much, it spent almost half of the country's total budget on health and education and agriculture, and really addressing poverty levels, job creation there. So it's really, commitment coming through not only from government, because government can't do it all by itself, but commitment from both government and business, the good leadership coming through, and spending. There's still a lot of resources needed in order to carry out some of these goals. So really, it's also about policy implementation as well. Some countries have really good policy, but the implementation is just not being seen.
All right, concerted efforts indeed there. Sumitra, thanks very much for joining us. Sumitra Naidu live in Johannesburg, Sandra Guthman in Brussels. Thank you for your time. Now, the African Development Bank is negotiating with its members to create a new fund to finance infrastructure projects in Africa. An official of the bank who spoke to Reuters said that there were many wealthy sovereign funds on the continent that could help to meet the infrastructure funding gap. The African Development Bank estimates the need of the African continent at $100 billion every year for the current decade and is financing around $8 billion, including $5 billion for the infrastructure projects in Africa. The bank's annual assembly held in Marrakesh will decide the size of the fund on Thursday. The bank would get funds from Libya, which will become an active member, Algeria, Equatorial Guinea and Botswana. Now, the African Insurance Organization has held its 40th conference in Cairo. 700 delegates representing over 55 insurance companies from Africa, Europe and Asia attended the conference that was inaugurated by Egyptian Prime Minister Hisham Kandil and a host of ministers. The conference discussed increased cooperation within the insurance industry and how insurance can play a part in the economic development of member states. CCTV's Yasser Hakim with more details.
Insurance industry to support economic development and Pan-Africanism. This was the theme of the conference, echoed by Prime Minister Hisham Kandil, who opened the conference.
Egypt and Africa needs an extensive effort to eliminate the economic problems which faces the continent, like poverty, illiteracy and diseases. I do believe Africa is capable of achieving a quantum leap towards solving its problems, promoting a sustainable development that will improve the livelihoods and standards of living of its people and create a better future for the coming generation and occupy its rightful place in the world.
A non-governmental organization established in 1972, the AIO, includes 326 members from 50 African countries representing the insurance sector. Members aim for greater African integration to face the challenging times, where according to the World Bank, economic growth across the globe has declined by 4% in 2012, with the African insurance sector achieving only 2% of its target premium.
This conference is very, very important because it brings together insurance practitioners from the Africa region as a whole. It integrates us all and we try to share experience from all over Africa. And it's the economic wing of the Africa Union. And I'm sure at the end of the day, the integration will yield much, much fruit for Africa.
The AIO says there are 40 African countries that allow the insurance private sector to operate, with revenues close to $6 billion. That is why non-African delegates were present to make use of the potential available in the continent.
I'm very excited to be here at this conference. This is a wonderful place to meet everybody who plays a significant role in the African insurance sector. And basically our purpose for being here is to meet up with potential new clients, to meet up with our existing clients, to get an idea of what is going on in the African insurance space.
Despite Egypt's economic hardships, the insurance sector saw a growth of 8%, a sign of strength. But for some, it is not enough.
The margin is still very small. We are discussing here how to concentrate on microfinance to increase investments. We also need to reach more African citizens to know more about the importance of insurance in their lives.
What the organizers are trying to do is to try to create awareness, not just in Egypt, but all over Africa. This is Yasser Hakim for CCTV, Cairo.
Established 5 years ago, the Ethiopian Commodities Exchange is an innovative mechanism that is empowering farmers through better pricing and access to markets. The ECX trades in a number of commodities, including coffee, sesame, haricot beans, maize and wheat, and is said to be the first of its kind in Africa, as CCTV's Robert Nagila discovered.
It's a process you don't get to see often across the African continent. A commodities exchange in action. Former banker Antene Asefa, CEO of Ethiopia's Commodity Exchange, says it's the only one of its kind in Africa and in many ways globally.
We are dealing with everything that the commodity market needs to have.
And this is how it works. An initial broadcast is made announcing the session. Traders then make their way to the trading floor. The bell goes off announcing the beginning of the trading session, introducing a frenzy of activity. The traders in green coats are the sellers, while those in brown coats are the buyers. The exchange has 57 warehouses around the country where the commodities are deposited. And apart from the exchange, it also settles and clears the commodities, cutting out the middleman. This, Asifa says, has greatly increased the local farmers' income.
It used to be like less than 30% of the full value of the commodities in the past. But now this has dramatically increased and their livelihood has improved.
Once a bid is made and agreed upon, the deal is sealed by the clapping of each other's hands.
On the tomorrow, trade transaction will be completed and the buyer can pick up his or her commodity within 10 days' time.
In 2008, the ECX was trading 138,000 tons, but by 2010, that figure had jumped to over 500,000 tons. Between 2010 and 2011, the value of the ECX rose by 368%, amounting to $1.1 billion.
So the market's now shut for the day, the trading floor's empty, and the final price list up on the screens. Now the figures you see in red basically indicate there's been a drop in price from the previous day. The ones in orange basically say that the prices are static, no movement from yesterday, and the ones in green indicate that there's been an increase from yesterday's price.
The data from the market is transmitted in seconds to farmers across the country, giving them access to international markets and price information. This has created a reliable, transparent and efficient market, redefining how Ethiopia deals with commodities globally. Wabat Magila, CCTV, Addis Ababa, Ethiopia.
You're watching our BizAfrica. Let's take a break. Coming up, how uncertainty of upcoming elections in Zimbabwe is pushing the already fragile economy closer to recession.
BizAsia. Asia means business.
Welcome back. Uncertainty over the date of elections in Zimbabwe is pushing its fragile economy closer to recession, just as it was pulling out of a decade of declines. Presidential and parliamentary elections are scheduled to be held this year, but political reforms and problems, including finding the money to pay for the polls, are holding things up. So far, no date has been set yet. Zimbabwean Finance Minister Tendai Biti says the economy could have shrunk by up to 3% during the first quarter of this year due to election uncertainty, as well as low farm outputs, declining tax revenues and export earnings. The country needs some $132 million to fund the election, but conditions attached to any foreign financing have divided the already fractious unity government. Let's discuss this further with Mariam Bama. She joins us live from London. Mariam, good to see you. So are there fears that this uncertainty over when the elections will be in Zimbabwe could see investors not just halt their projects, but perhaps even pull their money out of the country?
Absolutely. You know, the ongoing concern is that it won't be a democratically elected government. At least that's how people from the outside are looking at the situation. Now, experts say this raises alarms for investors when you consider that many African economies are still heavily dependent on things like raw materials, which are not always a good resource for economic development. Reason is, when you factor in possible fallouts from government instability, like what we're seeing right now in terms of just identifying a time for election and actually go going through with it, it has a large impact on sectors that support the economy. Now, oil-rich Nigeria is one example of this, struggling with poverty and political turmoil and corruption, hindering on real development. And if we see the elections in Zimbabwe proceed on June 29th, that will calm market jitters and restore some confidence.
But Mariam, is the government doing enough to create incentives to sustain investor confidence and perhaps even have the investors keep their money in Zimbabwe?
You know, it's a bit of a double-edged sword for the government, which is struggling in a political deadlock over money, as you said earlier, to finance the election itself. One option has been to raise mineral royalties, but some argue this could deter foreign companies from going into the mining sector, perhaps because they would have to pay more out. But if the elections aren't even secured, that will create more instability and deter investors anyway. So, you know, a lot of analysts that we spoke to here say the government needs to ensure the international community that the elections will go through. That's the first stage, to remain an attractive destination. In fact, the Prime Minister is already trying to do that by welcoming more Chinese investment, asking for stronger cooperation after the elections, trying to secure it now early on. And let's not forget, of course, China is Zimbabwe's third largest trading partner, worth about $1 billion last year alone. And this sentiment was very much echoed, of course, this week with the Chinese vice premier in Zimbabwe.
Precarious situation there indeed for Zimbabwe. Mariam, as always, pleasure having you with us here on BizAfrica. Mariam Bama joining us live from London. So let's take a look now at how the major bourses in Africa end the day today. The Nigeria All-Share Index closed today as Nigerians celebrated Democracy Day. The JSE, however, ending the day in the red, about 1.5% points, 41,426.26 points. The Nairobi Securities Exchange in the green, closing the day at 4,987 points, 1.6. And finally, the EGX ending the day in the red at 5,338.09 points. So let's call it a day for BizAfrica.